Good morning and welcome to today's episode of Crypto Watch. I'm joined by my co-host, and together we'll be diving into the latest news and trends shaping the world of cryptocurrency.
That's right, and we've got a lot to cover today. India's Central Bureau of Investigation has been making headlines with a massive crackdown on the GainBitcoin scam. Can you walk us through the details of this story?
Absolutely. According to reports, the CBI has conducted raids at 60 locations across India, targeting individuals and businesses linked to the GainBitcoin scheme. For those who may not be familiar, GainBitcoin was a cryptocurrency investment platform that promised unusually high returns to its investors. The scam, which was launched in 2015, is estimated to have swindled investors out of around $800 million.
That's staggering, and what's even more concerning is that this scam has been going on for so long. It's a reminder that despite the progress we've made in regulating the crypto space, there are still plenty of bad actors out there looking to take advantage of unsuspecting investors.
Exactly. And it's not just the scale of the scam that's noteworthy, it's also the fact that the CBI is taking such a strong stance against it. This crackdown sends a clear message that law enforcement agencies are serious about tackling crypto crime.
Moving on to more positive news, we've got a story about Bitcoin miner Genesis Digital Assets, GDA, expanding its operations in West Texas. Can you tell us more about this development?
Yes, certainly. GDA is adding 50 megawatts of mining capacity across two sites in West Texas. This move is significant because it not only underscores the company's commitment to growing its operations in the United States, but also highlights the increasing importance of Texas as a hub for the crypto mining industry.
That's a great point. We've been seeing a lot of interest in Texas from crypto companies, and it's easy to see why. The state's favorable regulatory environment, combined with its abundance of renewable energy sources, makes it an attractive location for miners looking to set up shop.
And it's not just about the economics, it's also about the environmental benefits. GDA's commitment to expanding its operations in West Texas could help to reduce the carbon footprint of the crypto mining industry as a whole.
Well, we'll be exploring the environmental implications of crypto mining in more depth later in the episode. For now, let's keep the focus on GDA's expansion plans. What do we know about the company's long-term strategy? And how does this move fit into its broader goals?
From what we've gathered, GDA is committed to increasing its hash rate capacity, which would cement its position as one of the largest Bitcoin miners in the world. This expansion in West Texas is just one part of that broader strategy, and we can expect to see more developments from the company in the coming months.
Well, we'll be keeping a close eye on GDA's progress, as well as the ongoing developments in the GainBitcoin scam. Stay tuned for more analysis and insights on these and other stories as we continue our conversation.
As we were discussing earlier, the market has been quite volatile lately, but there are some altcoins that are managing to buck the trend. Story Protocol's IP is one of them, with a 40% surge in price as traders bet on IP tokenization.
That's right. Story Protocol is a project that tokenizes creative assets such as art, music, or even AI-generated content. This is an interesting space as it allows creators to monetize their work in new and innovative ways.
Exactly. And it's not just Story Protocol that's seeing gains. Hyperliquid's Hype is also doing well despite the overall market downturn. It's clear that traders are looking for opportunities in the altcoin space, and these projects are benefiting from that interest.
Building on what we discussed earlier about the importance of innovation in the crypto space, it's clear that projects like Story Protocol are pushing the boundaries of what's possible with blockchain technology.
Speaking of pushing boundaries, let's talk about Bitcoin. With over $5 billion in notional value set to expire this Friday on Deribit, all eyes are on the max pain price of $98,000.
That's a lofty target, and it could have significant implications for spot prices. If the max pain price is reached, it could push spot prices higher as traders scramble to cover their positions.
And that's not the only factor at play here. The $5 billion options expiry is a major event, and it's likely to have a ripple effect on the market. We've seen in the past how options expiries can impact prices, and this one is no exception.
It's also worth noting that the max pain price of $98,000 is significantly higher than the current spot price. If we see a move towards that level, it could be a sign of a larger trend shift in the market.
Of course, it's impossible to predict with certainty what will happen, but it's clear that this option's expiry is going to be a major event. We'll be keeping a close eye on the market and bringing you updates as the situation develops.
And finally, it's worth tying this back to our earlier discussion about market volatility. Events like this options expiry can have a significant impact on prices, and it's a reminder to always stay vigilant and adapt to changing market conditions.
As we were discussing earlier, the rise of cryptocurrency thefts has been a pressing concern in the industry. It seems like Bybit is now taking a bold step in combating these threats, particularly those originating from North Korea.
That's right. Bybit's CEO, Ben Zhou, recently announced a war on North Korean hackers after a massive $1,400,000,000 Ethereum theft. The exchange has launched a bounty site that allows users to help track and recover the stolen funds.
Building on what we discussed about the importance of security measures in the crypto space, it's interesting to see Bybit taking a proactive approach. This bounty site is an industry first, and it shows aggregated transparency on the sanctioned Lazarus money laundering activities.
Exactly. By allowing users to connect their wallets and become bounty hunters, Bybit is essentially crowdsourcing the effort to track down the stolen funds. This move not only showcases Bybit's commitment to security, but also highlights the need for community involvement in preventing such thefts.
Speaking of community involvement, let's shift our focus to the market. We've seen some interesting developments in the XRP and Doge prices. XRP seems to be holding on to its rally hopes while Doge's uptrend has come to an end.
That's right. XRP is currently holding the 38.2% Fibonacci retracement level of its November-January surge. This is a crucial level as Fibonacci retracement levels often serve as potential areas from which prices resume their primary trend.
For our listeners who might not be familiar with Fibonacci retracement levels, can you explain what this means in simpler terms?
Essentially, Fibonacci retracement levels are used to identify areas of support or resistance in a price chart. In XRP's case, the fact that it's holding the 38.2% level suggests that the price might be due for a bounce back, potentially resuming its upward trend.
That's a great point. Meanwhile, Doge has dropped below its key support level, marking the end of its uptrend. What do you think this means for Doge's future price movements?
It's difficult to predict with certainty, but the fact that Doge has broken its uptrend suggests that we might see a period of consolidation or even a decline in price. However, as we've seen time and time again in the crypto market, trends can shift quickly, so it's essential to keep a close eye on price movements.
Absolutely. As always, we'll continue to monitor these developments and bring you the latest updates in the world of cryptocurrency.
Building on what we discussed earlier about the increasing institutional adoption of cryptocurrencies, a major Bitcoin holder is under pressure. Strategy, the self-described Bitcoin treasury company, saw its stock plummet by over 11% on Tuesday morning, sparking fears of a potential forced liquidation.
And that's not entirely unfounded, considering Strategy is the largest corporate entity holding Bitcoin. However, analysts at the COBE are saying that concerns may be overblown due to the structural safeguards in place.
That's right. According to them, a forced liquidation scenario for Strategy is highly unlikely. But the fact that we're even discussing this possibility highlights the risks associated with institutional investment in cryptocurrencies.
Absolutely. It's a reminder that even the largest players in the market can be vulnerable to market fluctuations. And speaking of market trends, have you seen the latest news from the gaming world?
You're referring to Activision's admission about using generative AI in the development of Call of Duty Black Ops 6? Huh?
That's the one. It's interesting to see how AI-generated content is becoming increasingly prevalent in game development. Steam's new requirement for developers to disclose the use of artificial intelligence is definitely a step in the right direction.
Transparency is always a good thing, especially when it comes to new technologies like AI. It'll be interesting to see how this trend develops and whether we'll see more gaming companies adopting AI-generated content in the future.
And who knows, maybe we'll even see blockchain-based gaming platforms incorporating AI-generated content. The intersection of gaming, AI, and blockchain is definitely an exciting space to watch.
Definitely. We've seen some promising projects in the past, like the AI-generated NFT art platforms. It'll be interesting to see how these technologies continue to converge and create new opportunities for creators and gamers alike.
Absolutely. As we continue to explore the intersection of technology and art, we'll likely see even more innovative applications of AI, blockchain, and cryptocurrency.
And that's what makes this space so exciting, the constant evolution and innovation. We'll be keeping a close eye on these developments and bringing you the latest updates as they happen.
I have to say, that viral video of AI agents switching to their own Gibberlink protocol has left me wondering about the future of communication in the digital age.
It's certainly a fascinating concept, the idea that AI agents can optimize their communication by ditching human language and switching to a custom protocol that's 80% more efficient is both impressive and unsettling at the same time.
Exactly. And it got me thinking about our earlier discussion on the role of AI in the crypto space. As we see more advancements in AI technology, how will this impact the way we interact with each other and with machines in the context of cryptocurrency and blockchain?
That's a great question. I think we'll see a lot more emphasis on developing protocols and systems that can facilitate seamless communication between humans and machines, as well as between machines themselves. And who knows, maybe one day we'll have our own Gibberlink protocol for crypto transactions.
Well, I'm not sure if that's a good thing or a bad thing, but moving on to more serious matters, I wanted to touch on Jeremy Allaire's comments about dollar-backed stablecoins registering in the US.
Ah, yes, that's a big story. Allaire's suggestion that issuers of dollar-backed stablecoins should be required to register in the US is a significant development in the ongoing debate about stablecoin regulation.
And it's interesting to see Circle taking a proactive stance on this issue. As we discussed earlier, the regulatory landscape for stablecoins is still evolving, and it's clear that there are many different opinions on how to approach it.
Exactly, but I think Allaire's comments highlight the need for greater transparency and accountability in the stablecoin space. By registering in the US, issuers can demonstrate their commitment to complying with regulatory requirements and maintaining the trust of their users.
And what about the potential implications for the market? Do you think this could have a significant impact on the adoption of stablecoins?
Well, it's hard to say for sure, but I think it's likely that we'll see a mix of both positive and negative effects. On the one hand, greater regulatory clarity could help to increase confidence in stablecoins and drive adoption. On the other hand, overly restrictive regulations could stifle innovation and limit the growth of the market.
That's a great point, and I think that's a good note to end on. As we wrap up today's show, what are your key takeaways from the day's stories?
For me, the big takeaway is that the crypto space is constantly evolving, and we need to stay adaptable and open to new ideas and developments. Whether it's AI-powered communication protocols or regulatory changes, there are always going to be new challenges and opportunities emerging.
And what about your market outlook for the week ahead?
I think we can expect to see some continued volatility in the markets, particularly as we wait for more clarity on the regulatory front. But overall, I'm cautiously optimistic about the long-term prospects for crypto, and I think we'll see some exciting developments in the months to come.
Well, that's all for today's show. Thanks for tuning in, and we'll catch you all on the next episode.